Hello, everyone. The Hulk himself showed up during the final hour of the market. We skyrocketed. We shot up almost $4 during the final 40 minutes of the market. The Hulk woke up from his sleep. We were chopping around the entire day. He decided to push the market up. So in today's video, we're going to take a look at the S&P, the Nasdaq, the Russell, the dollar, the large tech stocks. In all honesty, this is going to be another very short video. Trading within this range for quite some time, and it doesn't really feel like there's a lot of new things going on. I'm going to talk about what the next steps are for the market. This is a short week, so Thursday is going to be the final trading day of the week and of the quarter. So we have to see how that takes into consideration in the market as well. So we're going to take a look at all those things. Make sure to like, comment, subscribe, do all that good stuff, and let's get started with the video. Numero uno, trying to go short on the S&P and in the overall market came down to a level of support proved to be very, very detrimental. When we are in an uptrend, going short at levels of support have proved time and time again to be extremely awesome bear traps. In an uptrend, when the market is strong in general, if you simply go long at levels of support, it's been working very, very, very well. And that was another reason why I was weary of trying to short anything once we got down 518. The downside potential, when you're looking at it from a risk-reward standpoint, there's a lot of buyers in the market. We're already close to 518. What is the downside target? 516, 517? What is the upside risk? The upside risk would be 523 to basically all-time highs, right? So if we're at 518 and the downside reward is $1 to $2, upside risk would essentially be $3 to $5. This is a terrible risk-reward trade. So it was an awesome opportunity for people to become bullish at a level of support, play alongside the momentum. That's exactly what ended up happening. So now, we've been trading within this range. We've playing around at these levels, 515, 520, etc., etc. Trading here. The main thing for us to take into consideration, final week of quarter. Final week of the quarter, along with a long weekend. Generally, when that happens, there tends to be some bullishness into the end of the week. And I was saying that this week, that is one of the main things that could end up happening. And lo and behold, it's playing out. So that's another reason why trying to go short anything for the short term was not going to be beneficial. And it true to basically what I was saying, trying to be short for this specific week when there's so much bullish potential is not intelligent, and it would be very, very risky. So the only other thing that we could really look at now is continue to look at the rest of these. You could clearly see that the Nasdaq is continued holding 444 and 442, right? The Nasdaq didn't do as well today as the IWM. So the IWM really, really started to skyrocket here. And a lot of buyers started to show up in the IWM. Basically, the IWM has a lot of potential to hit 212 heading into next week. But once again, as we're at a level of resistance, it becomes difficult to start going long. What you would rather want to see is a bit of a pullback, and a pullback in the IWM to follow alongside this momentum, get a better buying opportunity. But the IWM absolutely looks very, very bullish. But going long here does not a good risk-reward trade in my opinion, unless you get it for a lot of time. Now, the other thing is the large tech stocks are either holding support or they're starting to do well. So, for example, Apple, it held the 168 level, and we skyrocketed to 173 today. Stocks like this, Apple, Tesla is starting to consolidate, and after obviously the big bounce up from 165, 167 area, and we shot up to 183, Tesla is starting to consolidate, which is normal. We have Nvidia and AMD pulling back and consolidating the entire day today. Nvidia and AMD basically very, very stagnant. And that's generally what we want to see out of big winners. When a big winner has a big run up, right? We want to see some stagnation in their price action, and it'll give enough time for the losers to get some buying pressure for a move to the upside. And that is currently what is happening at the moment. And if we end up having a continued bounce into next week, into the quarter's beginning, I'm not entirely sure if that's going to happen. I'm way more bullish during this week than I am next. Because once April and May start coming around, April in general is bullish, but I'm not too fond of being extremely bullish with short-term plays. It's way easier to be bearish longer term during April and May. Buy some longer term puts, especially into this strength. If we see on the SPY, see a new all-time high, 526, 530 area, getting into puts expiring in June is way more intelligent than it is to get into longer term calls. I hope that makes sense. So let me just show you guys that on the chart. So essentially, if heading into April, mid-April, over here, right, and we're trading up here during April, right, going long for end of the year calls truly does not really make that much sense in my opinion. I would rather be leaning short for those same time periods for a preemptive pullback back down to these levels. Then this would be a better opportunity long than it is to be going long up here. Hope that makes sense. Pretty good visual representation of what you should not be doing if we end up rising to around 530 April. So with that being said, the large tech stocks as a whole are either taking a hit or they're consolidating, and then the losers are bouncing. The SPY and the NASDAQ is not getting that much love. The market in general, the SPY, the whole day was being pulled up by Russell 2000. So, with that being said, do I think the SPY is going to continue rising above 526, make a new all-time high this week? Maybe. Do I think it's going to continue rising into next week? Probably, given this strength, but generally, it just doesn't really make sense to enter long. Regardless of what happens, regardless of how much higher we go, from a risk-reward standpoint, it does not bode well. Go long up here. It's way more intelligent to go long at levels of... And I hope watching these videos has taught you guys trust support and resistance levels. Not generally go... you don't go long at levels of resistance. Generally, going at levels of resistance, that's when you take profit on your longs. Go long at levels of support instead. Not up here when the market has already rallied. Alright, so I hope you guys enjoyed today's video. I hope this makes sense. And yeah, I hope you guys enjoy. Please sure to like, comment, and subscribe. Do all that good stuff. And I will see you guys bright and early tomorrow morning. This is going to be the last trading day of the quarter. And then I will see you guys over the weekend. Alright, love you guys.